Welcome to Wolf Talk. Today we have Corey Hassman, our senior advisor at Wolf Commercial Real Estate. We're going to talk a little bit about some residential and commercial and what the difference is between the two.
So to start off, my background is I came from residential real estate for 6 years at Berkshire Hathaway, and then made the transition over to commercial real estate, working at the wonderful Wolf Commercial Real Estate. And some of the differences that we'll get into, I've experienced and am able to share for either young agents or young brokers looking to find more information on both.
What would you say is one of the main components or the main differences between residential and commercial real estate as an overall general consensus, just for somebody that's younger, looking to get into the business, where they want to be, where they want to go?
Sure. So the basic A to Z in terms of the differences is that the product in which you're selling or you're buying may seem like it's under the same umbrella, but it's completely different. In residential real estate, you're representing a friend or a family member that's buying a home. In commercial real estate, you're representing a business or a company or a brand that's looking to expand or consolidate or find a new space for their company. The other difference that you see a lot of the time between the two is how the processes work. In residential real estate, you're dealing with the agent on the other end a lot more than in commercial real estate. Attorneys involved amongst one another, and you're dealing with the business terms along with your client, not as much involvement as you are in residential real estate. Those are just some of the two I can think of primarily.
So that being said, I know that you mentioned like their, relations are a little bit different, transactions are a little bit different. What would you say the timeline between the two? Like, how do they differ, or how are they similar?
So it's a great question. The difference really is that in a commercial sale, not talking about leasing at the moment, but in a commercial sale, you have a due diligence period. And that due diligence period can range from somewhere between 15 days at minimum, all the way to 6 months if it's deemed a large project. And that can take a long time to make sure that you have all of the requirements and the prerequisites from the township set up to do that. And a lot of the times, the contents within the due diligence period are what then allow the rest of the transaction to be approved. However, on the residential end, there's really one main factor that takes the most time, and that's the inspection, buyer's response to inspection period.
Right.
When you're buying a home, or you remember when your parents were going into a new home, they look for everything in the home, A to Z. And that's not to say that there aren't inspections in commercial real estate. However, it's more pivotal to the buyer because they're moving into that home and they need to have those things fixed. So those are the things you can see.
It's like almost a part of like negotiation.
Exactly.
You can utilize that for your negotiation when you're dealing in residential.
And that could be what takes up the most amount of time. You don't have delays as it gets closer to closing as it pertains to mortgages or loans. They're set up and approved before a lot of the time you get into the process. In commercial real estate, there's a time after you sign a contract to then get an approved mortgage or loan. That can also take some time as well.
And that also has to do with like the township and things like that.
Exactly.
As well. The largest part of that.
There's different things from a legality perspective that can cause delays in commercial real estate. And that's not to say that attorneys don't involve themselves in a residential sale as well. That can happen. But most of the time what we see on a commercial end is that can take more time.
Speaking of the financing side and the due diligence, as far as finance, what are the differences between commercial as opposed to residential? Everybody talks about rates. Like, what are you seeing, or what have you seen the difference between the two as far as that goes, or even like an investment sale over multifamily? What's all entailed in that? I know it's pretty general, but.
Yeah, sure. So I think depending on the type of transaction that prospective buyer is looking for really dictates what loan or mortgage entity you end up going with. And what I mean by that is contrastingly, on the residential end, they look for the credit and finances the same that they would on the commercial end, except a lot of the time on the commercial end, you're once again representing an entity or a business that's getting a small business loan or a larger size business loan to be able to occupy a new space or take on, an expansion of their company. On the residential end, they really look at the history of everything that could possibly impact a debt to credit ratio or a debt to income ratio rather, or a credit score. And those components make up a different process on the lending end. You still apply for a pre-qualification and you still are given your quote and what you would get up front. However, everything after that is impacted.
What advice, I guess I should say, what advice would you give a young broker, right? Somebody that's, let's say, fresh out of college or just even thinking they haven't even gone to school for it because it's the same licensing, right? So like what advice would you give them as far as like whether they should go the residential route, whether they should go commercial, like especially since you have experience in both, and almost like what kind of made you switch as well?
Yeah. I get this question a lot because I have a lot of peers that are in the real estate world, either from a business or finance standpoint or coming from a different sector to real estate. And they're wondering what the transition is like and what, they may find the best fit for them, being they're coming from a sale background or being that, like I said, they're coming from a finance background. And on a residential end, it has to deal a lot more with how you can negotiate and discuss amongst other agents how to get your client the best possible deal. That's your fiduciary obligation. On the commercial end, what I've found is if you are good with sales and you're good with talking with people, that may not be everything that culminates being a commercial broker. There's a lot of business, there's a lot of finance, and there's a lot of numbers on the back end that if you're not able to establish that foundation for yourself, there's other parts to a commercial sale that might confuse you. If you do take that extra time to go and get, the necessary education, I think from a business standpoint, it really might be a good fit for somebody that, is coming from a numbers background or is coming from a finance background. What I found to find the most success in residential real estate is that I love meeting new people. Right. I love seeing new homes. I love touring new neighborhoods. And I think I got, a lot of new clients and new friends just from walking around, just from seeing new places. And, for somebody that can be outgoing and can be social and is also good at sales, residential real estate is a really great job to get yourself integrated with. And as the market continues to show us that it is promising in the future and going to be positive, real estate's a great industry to get into. I'd say lay out what your pros and cons are and what your fortes are in the industry and see if the differences between your social nature and sales versus your numbers background and business education can kind of meet in the middle to make the best decision.
That is it for our Wolf Talk for this week. Thank you for tuning in, Corey. Thank you for stepping in and
catch us next time for a new segment.
Absolutely. Bye, guys.